I wanted to have a quick discussion around the formation of ranges that are of interest from a Wyckoffian perspective, how they form, and kind of how we begin thinking about those at a very early stage. And with a huge caveat, of course, that we have no fucking clue if this is actually going to work out in this way. We're just purely speculating at this point in time. But I think it's important to understand what we're looking for as the core touch points for any range that we want to consider as either accumulation or distribution. So I'm going to use Finex for this, just to get slightly more data. But I want to highlight some of the key touch points we're looking for. Firstly, volume is absolutely the number one thing that we need to use when considering Wyckoffian ranges. Okay, it's the number one thing that gives us our first major clue when trying to piece together the actions and intentions of the market. Volume here is standout. Okay, volume here is standout, and volume here for now is standout. Okay, these are like the key areas that I want to draw attention to. Key, key, and key. The reason that they're key is that they break from the norms that we'd seen within that range prior. So during this region here, yes, we had two standout points here, but this is a huge volume anomaly, and this is a huge volume anomaly in comparison to what we've been seeing in the recent weeks. Okay, so basically this volume candle here obviously is the largest volume candle that we have seen in a year. So this is a huge standout moment for us. So volume is one of the first things that we would look for when we are thinking about Wyckoffian ranges. And the reason that I pull out these two is, again, this candle here is the largest sell candle ever seen, right, on Finex. And this was the start here of this period of accumulation that led to the ETH run up to this 370 level. So this touch point here that we were looking at, largest volume candle here, began this accumulation period, which lasted for 4 months, 5 months, before moving us up to the 370 level. And we've now seen again, large red candle here, volume anomaly, and that's taking us down to another interesting level down here, basically back on top of this former accumulation range. So volume number one. So let's dive in on a bit lower time frame here, and I'll probably use the 4 hour now. Do I want to use the 4 hour? Or do I want to use the 1? Let's use the 1 hour for now. Let's stick on the 1 hour just to have the discussion around what we're speaking about here. So this is where the volume truly came in, was this candle here. All right, this was the true candle that really set the marker in terms of the severity of this sell-off, was this candle here. From a Wyckoffian perspective, we always look for what's referred to as climactic action. And the way that climactic action is defined is basically through large volume, heavy volume. And if you think about this, what it's essentially, and it's not like a great application, but I'll give you the definition anyway. What it's basically looking at is you're looking for a moment at which essentially people are, for want of a better word, capitulating. Okay, you want to see an area in which there is a huge amount of selling, and you would have traders who were also looking at selling off because they were concerned about what was happening to price. So that is how we would sort of define and think about climactic action. And we see that in this region here. We see that climactic selling. We see that huge sell volume down here. And actually, we see a good response on the following candle on the hourly here. And we then get a second large red volume candle when we come down to this low. So from a Wyckoffian perspective, this is the sort of area that we would start to consider as something that may look like a selling climax. Climactic action that potentially brings to an end a downtrend. Potentially brings to an end a downtrend. And that's what we're looking for as our first touch point from a Wyckoffian perspective. Once we have a selling climax or an area that we're happy to think of as a selling climax, and remember what I said at the start, right now, this is so early on. Okay, I'm not putting my name to this as a fix. This is exactly what it's going to work out like. But this action is a good opportunity for me to discuss and share some of this information. What we look for is essentially from any selling climax, we want to establish a range. Okay, we want to establish now a range at which accumulation or redistribution, whatever this may turn out to be, takes place. The selling climax gives us at the bottom of our range. It always gives us the bottom of the range. And then what we'll see is what many of you will be accustomed to seeing on Twitter is something like the accumulation or distribution schematic playing out, where we see action that looks like this, right? And we have dips down, we have dips above, and then we begin to either establish our way out into a fresh uptrend, or we begin to make our way down if this is redistribution. The selling climax and the volume around that gives us the first reactionary point that we are looking for when we're thinking about range formation for accumulation or distribution. Without the presence of something that looks climactic like this, the range means nothing from a Wyckoffian perspective. It has to be linked directly to large volume in order for us to give this credibility as a potential range for one of these actions to be taking place. So on the back of that, then we'd obviously be looking for this is our selling climax. This up here is potentially our reactionary point. Okay, so our reaction, selling climax into reaction. Okay, into a test here, right, and then rejected from this. And then what we're looking for are the springs, right? This is the key bit from an accumulation perspective. Are there springs in this region? And what springs are designed to do is they're designed to shake out longs. Okay, they're designed to kind of fool the people who are trading this range into the direction that we're going to go. So springs, what they'll do is they'll come down below the selling climax level, and they will very quickly reverse back inside this range. Interestingly, from just my own personal perspective, I'm not quite sure that this level will be touched. It may be touched, but I'd much rather think about the reaction sub $100 here. So if we're looking for any springs here, then I would expect them to be quite vicious sub $100, and very vicious if they're true to be springs below this $89 level here. Next steps in terms of what we're looking for from a Wyckoffian perspective, and if we're considering this as accumulation versus redistribution here, is a considerable length of time spent in this range. A considerable length of time chopping between this level. Now, this isn't something that should put you off as a trader, because we're essentially talking about like a 70% range here. So there is huge opportunity to trade between these levels and to take advantage, even if we're seeing some sort of formation for larger purposes, accumulation, redistribution. What we're looking for now is primarily what we've seen here is reactions above any highs and its reactions below any lows. That's what we're looking for. We're not able to have any deeper classification on this as a potential range for accumulation or markup until we see some of those key touch points achieved. Those key touch points are moving outside of the range and being pushed back inside, moving below the range and springing back up into the range. And then we're able to start thinking about some of these actions as potentially springs. Okay. And what's the associated volume like? If we touch down here and we suddenly see a big demand candle kick in, then that's a really solid sign for us. So right now, this is all really, really early on. This is all super early stuff, and I'm not sort of trying to map this out as an accumulation or redistribution range for you. I'm simply explaining some of the key concepts that you should be looking for if that situation now develops on ETH on BTC. Because from a normal market perspective, we may also see this just do this, hit into supply, get rejected, and we might continue in a range that looks like this. So purely from a Wyckoffian perspective and a what should we be looking for now, hopefully that gives you some basis and some idea around what are the key areas, from prior ranges, like we saw down at this level over here. Okay, like we saw down here. What are those some reactionary points down here? Where are some of those springs taking place? Where is some of that climactic action taking place? And how can we look at taking advantage of these situations? So in here, we've got a bunch of highs in here, right? Falling back below the range, not ready to break out. Falling back below the range, not ready to break out. Okay, but in this particular accumulation, this was quite an interesting one because we actually just held up at lows. So we actually just started to print these patches of lows down here. And these were the optimum places, right, where the informed buyers were buying. Because these were the places that were never truly retested. And we got very close down here. At this level here, that was the closest we got to retesting it. And everything was just a case of established on this base, and then this base through here, which is what eventually led to the breakout, retest, and uptrend. So we're going to be looking for something very similar on BTC and ETH at the moment. And even if we consider this range, our sell-off has been far stronger through this last region here than we saw during this rundown here. Okay, this was a strong sell-off, and essentially we're kind of like at this point here before continuation. So we've got a long time to go, I think, in this area before anything is truly defined as accumulation, redistribution, breakout, whatever it may be. And I don't personally believe that the way that the markets are currently set up at the moment in order to support crypto becoming some runaway asset that immediately takes off in a V recovery back to the highs. I personally don't see it like that. I still see crypto as a potential opportunity for investors, but I think that comes with a cooling off period and an opportunity in order to accumulate ETH and BTC at some of the more favorable prices over the course of the next few weeks and months. Hopefully this video has given you a quick rundown. I say quick, I always do this. It's not a quick video. Hopefully this video has given you an insight into some of the touch points that I'm looking for, some of the thoughts around accumulation and distribution, and number one, those climactic points that we really begin to take interest in looking for information and soaking up information in order to provide ourselves with as much opportunity to discover the intentions of a range that is developing. Have a good weekend, everyone.